20 seconds or less,
Yes.
right? Tell me percentages that should be investing as far as should I go Roth? Should I do individual stocks? What percentage of my crypto should be? So that way people can have idea the budgeting part of it, how it should be spread in their portfolio.
Great question. Okay, 20 seconds or less. And again, this is something that we teach in our financial community, Financial Freedom Builders. Again, this is something that they're imparting, what we're implementing, and what has led to success for us in particular. Okay. Basically, consider it like a pyramid. Okay. And it depends on the season that we are in the financial times, but I'm just going to give you a general overview. 60% of the money, 60% of your money, 60% of it should be specifically in an ETF. What is an ETF? An exchange traded fund. What's an example of an exchange traded fund? The S&P 500. The majority of your money should be sitting in the S&P 500 if you're investing. Why?
Because it's safer.
Safer, one. Number two, it's a blend of different stocks in one particular fund. Think of it like this. And I use the same analogy all the time. You've heard me say this, RJ, and I've given this in a lot of places. Think of it like you're in a subdivision in a community, okay? You want to buy a house. So you're interested in buying a house, okay? I want that one over there. Okay, how much is that one? Okay, it's going for $300,000. Okay. What are the comparables with some of the other houses in the community? Okay, well, that one's $310,000. That one's $295,000. That one's $302,000. That one's $291,000. That one's $307,000. Okay, so $300,000. Okay, so that's about more or less what everybody else is paying more. Okay, I'm gonna buy the house. Great. So in this scenario, you didn't buy the most expensive house in the community. You didn't buy the cheapest house in the community, but you bought that house. Okay, great. The house appreciates, goes to $500,000. You're doing great. Okay, that's a stock. The house you bought in the community. But let's say you say, you know what? I just want to be, I don't know what, I just want basically I want to basically get a general sense of what that community goes for. Okay, the community in general goes for about $297. Okay, good to know. So if I buy a house now, on average, it's about $297. That's an ETF. An ETF is you're buying the community. You're not buying one house. You're getting the community. The average of the community, the house itself in the community you buy is the stock. So that's an ETF. The majority of the money you put in it is in the top 500 companies. That's what the S&P 500 is. It's the top 500 companies. Apple, Tesla, Microsoft, Nvidia, blah, blah, you keep going. That's what an ETF is. 60% of your money goes to there. 20% goes into what you call growth companies, okay? Some examples: Apple, Microsoft, Tesla, Nvidia, Amazon. What else? I'm thinking of some other. There's probably another one I'm missing there. Google.
Netflix.
Yeah, Netflix. And there you go. Netflix, Google. Those are the 20% goes into there. Now, that's 80% of all of your money is either in the in the S&P 500 and a combination of some of those companies. The majority of your money. Why? Because those are the strongest. That's the strongest combination of all of the strongest companies, and then the strongest of the strongest within that group, right? Now, that's 80%. Okay. Then, if you're gonna continue to do investing, you can use maybe 10%. I would say or so, about 10%, and you can use that for what's called swing trading. Whether you buy a stock for a little bit and then you trade it out to something, for a gain. So let's say you buy Apple and it goes up a little bit and then you sell it, right, to trade it. Okay, that's for swing trading. You're not holding it for forever. You can use that 10% portion for that, or you can use that also for cryptocurrency. So in conclusion, and then the other 10% is cash. You just hold cash on the side, and I can explain that later on. But basically, holding cash on the side is you're not investing it into anything. Okay, so why wouldn't I want to invest it into anything? Well, remember, every time you go into to buy a stock or investing, you going shopping, right? You go to the supermarket, and if you see a carton of eggs, which are normally $1, now it's $3, and you already have eggs at home, you may not buy those eggs, right?
Right.
Okay, I'll come back another day. But you go back to the store, it was $1, now there's 25 cents. You're like, oh man, I want to get a whole bunch. I have eggs at home, but this is the best price. So with the extra cash, you buy the eggs. That's why you have cash on the side. Because if a stock you like goes on sale, now you can throw it in there. That's what the 10% cash on the side is. But basically, in summary, 10% of your investment is what we teach. It should go into cryptocurrency.
Okay.